when you take that decision correctly. So in today's webinar, we'll learn on how to save lakhs while you are buying your house. Before we start, let me ask you, how many of you are planning to buy a home in the near future? You going to you're going to get a poll on your screens. Please vote. So I think most of you are going to buy the house within the next 6 months. So really, how you make use of this webinar will help you, will really help you to save lakhs and lakhs of rupees. Let me ask you another question. Now, you're out there to buy a house and you have an option to buy from the same builder but in two different projects. In one, you're getting a ready to occupy flat in phase 1, which is at 20,000 rupees per square feet. The second, same builder, just by the side of this ready to move property, there is another phase that he has started, which is under construction, where he says you buy it at 18,000 rupees square feet. It is cheaper, sir. Why do you want to buy in the more expensive phase? Just give me a 20% down payment and balance in construction linked payment over the next 36 months. Which one will you likely to go for? So let me ask you that question through a poll. This will come on your screen now. Please answer the question so that we can consider the implications of the answer. Well, I think as you can see, most of you want to buy the cheaper under construction flat, and that seems to be an obviously good choice. But is it truly so? Is it really a good choice? Let's examine why people go in for this choice. And if I were to ask you why you go in for this choice, I think most people answer that it is cheaper. Under construction property is cheaper as compared to similar ready to move in property, and therefore the appreciation that I'll get is higher. I pay based on the construction and therefore it is convenient. Plus I get much more choice. There are far many more flats that are available under construction than there are ready to move in, and therefore I get much better choice. And these are the major reasons why people typically tend to buy under construction property. Is there any comment that anybody has on this? Please raise your hand. You see the icon there. Please, if you have any comments, I'm wanting to hear it now. Please raise your hand and I will ask you to speak. Please speak when I ask you to speak. Is there anybody who would like to ask a question on why they prefer, or who would like to comment on why they prefer under construction property to ready property, or vice versa? The vote has been 67% in favor of under construction and 33% in favor of ready to occupy. Okay, I think Mr. Rohit Beria has a question or a comment. Uh, yes, Rohit, please go ahead with your comment or your question on this. Why you prefer or don't prefer under construction property? There seems to be some technical problems. Fine. Let's examine these three things why people normally prefer under construction property. That it is cheaper in terms of payment, cheaper in terms of per square feet price. It's convenient. You pay construction linked. It's easy to locate. You get far more choice. Let's actually relook whether these advantages actually stand scrutiny. When you look at it, the per square feet price, I think what most people forget is that it may not be as cheap. The under construction property may not be as cheap if you consider service tax and VAT. Please remember, service tax and VAT is payable only on under construction property. There is no service tax or VAT on ready to move in property, even if you buy it from a developer. So I think this, depending on the state, your service tax and VAT can add about 5 to 4.5 to 6% of the property cost, and that can make a huge difference between what is cheap and this whole notion that under construction is cheap, I think goes for a toss if you start taking into account service tax and VAT. The other thing that most people, I think, don't understand is that the interest, if you have taken a loan to buy, whether it is under construction or ready to move in, the interest on a ready to move in property is deductible. The interest on an interest payable on a loan taken to buy an under construction property is not deductible in the years in which the property remains under construction, and therefore even the financing of an under construction property is more expensive than the financing of a ready to move in property. So this, I think there can be a bit of a myth about how cheap an under construction property is. Also, this payment in easy, that I pay construction linked payment and it is easy. Okay, I think when you take a home loan is the same thing. You can pay your home loan in installments, and therefore I really don't see why people prefer under construction property just because it is payment is easy. As far as convenience choice is concerned, of course, I think under construction property definitely has more convenience. You get much better choice. But don't tell me that when you're buying property which is worth 50 lakhs, 60 lakhs, crore, 2 crores, you're really going to be lazy about how you purchase. More so, where your laziness can cost you lakhs and lakhs of rupees. I mean, just because it is easy to locate cannot be the reason that you prefer an under construction property. Plus, I think things that we don't consider. In an under construction property, there are lots of times when the project gets delayed and your cost rises. Obviously, the interest that you are paying rises, and this, unfortunately, given the state of the regulatory environment that we have in India, even the so-called reputed developers have project delays, and I think there is barely a project that gets delivered on schedule. A good project is one that gets delivered within 6 months of the schedule of delivery. So I think in an environment like that, the actual cost of an under construction property always is much higher than what you originally calculated. The other thing that most people forget, that it is not easy to sell an under construction property, because when you want to sell an under construction property, you need an NOC from the builder, and a builder does not want you to sell while the property is still under construction, and therefore will either delay the NOC, charge you some money, or ask you to sell at a price which may not be available in the market, etc. In short, huge restrictions on your availability, and hence an under construction property is not something that you should look at very lightly. Any questions so far? Are there any questions on what we have covered so far? Why under construction property may not be as cheap as it on the surface, as it looks on the surface? Please raise your hand. There is a hand icon on the go to meeting console that has opened up on your screen. Please raise your hand and I will be able to allow you to ask those questions. Venu Vagela has a question. Yes, Venu, what is the question that you have? I think the sound is not coming through. She tells us there is any other questions? I'm sorry, there are technical problems. Are there any other questions that anybody has? Fine, if there are no more questions, let's move on to the next one. What happens if you don't get the property, the kind of property that you want? You want to be in a particular locality and you can't get the property that you want. What do you do then? Well, I think you have two options to try and reduce the risk that you have in a situation like that. One is that you look at a 20/80 scheme. In a 20/80 scheme, it's now being advertised very heavily. You pay initially 20% and balance 80%. There will be two kinds of 20/80 schemes. One where you pay 20% now, balance 80% you pay after 2 years or 3 years, and that is irrespective of the stage of construction at that time. Now that kind of a scheme has no meaning at all, because even if the project has not moved 1 inch beyond the time when you actually paid the 20%, you'll still have to pay the balance 80%. And the price of that delayed payment would have already been included in the price that you paid. So that kind of a 20/80 scheme makes no sense. What you really need is a 20/80 scheme where you enter into a 3-party agreement with the lender, wherein the lender and the builder and yourself, the lender agrees to disburse the loan from time to time as per the construction stage, and the builder agrees to pay the pre-EMI interest to the lender till the construction is complete, and post that your liability starts to pay off the EMIs. Now that's a good scheme. It reduces the risk. The lender will look at seeing what is the construction and only disbursing that way. But please remember one thing, your liability to the builder clearly remains. You cannot get rid of your liability. If for any reason the builder does not pay the pre-EMI interest, if he defaults in paying the pre-EMI interest to the lender, then you will have to pay the pre-EMI interest, and if you don't pay, your credit history will be affected. So your liability doesn't go away, although it is still a fairly good way to reduce the risk of construction delays. The second, another good way is to look at projects that are pre-approved by at least one of the big five. The big five are Axis Bank, SBI, HDFC, ICICI, and LIC Housing Finance. If any project is pre-approved by them, then the chances that this project will at least get delivered with just reasonable delay is reasonably good. But again, please remember, just because a project is pre-approved doesn't mean that the construction risk is not on you. The construction risk will continue to remain on you, and clearly that is something you will have to budget for. But it is still better than investing in an under construction project with a builder who's not pre-approved. Moving on to loans. A lot of people first take a loan and then go and finalize the property. That's not always a good idea. It's in fact is the reverse of a good idea. It's always better to first finalize your property and then finalize your lender. And why am I saying that? One, if you finalize your lender, you paid a processing fee, got a sanction letter, and now you go with, when you finalize the property, you go to the lender, you discover the lender is not willing to fund this property. It may be from a builder that he does not, the project may not be approved by him. He may not be funding that project. Or if it is a resale property, there could be some title issues with him. And you may have to now forego your sanction fee and run after another lender to get you a sanction. On the other hand, if you finalize your property and if you're dealing with a private or a foreign lender, and it is possible for you to get your sanction fee waived off, especially if you're a customer with very good income, with good credit history and a large loan amount, it is possible for you to get your sanction fee waived off. It is possible for you to get a much better interest rate, typically a reduction of 0.05% to 0.1%, which can be substantial in home loan. That's very much possible if you finalize your property, because every lender is interested in disbursement, because that is what on which they make money. Okay, let me ask you a question, which is, will you, if you've got two options, you take a home loan which is available at 10%, or another loan that is available at 10.25%, which one will you take? So this quiz is coming to your screen right now. Please answer this question. Okay. So as expected, obviously, all of you chose 10%, and that is a very, very obvious choice. There is no earthly reason for you to pay more, unless, and let's talk of that unless, how sometimes a more expensive offset loan can be better than a cheaper regular loan. What is an offset loan? And this is a term that not many people are familiar with. So what is an offset loan? Offset loan is a regular home loan with a linked bank account. The bank account, there will be a savings account or a current account which is linked, and you do the normal transaction in that linked account. You deposit money, you withdraw money, your salary comes in, you withdraw money through the ATM, you write checks to your electricity company, or if it's you are a businessman, your sales proceeds come into that account, you write money to your vendors, etc. Yet always that account has some balance, or it can be zero, or it will have some balance. When it has some balance, that balance earns money at the home loan rate, and that is what helps you save money. that is what is called the balance in your linked account offsets your loan amount, and that is why it's called an offset loan. You gain interest on the temporary or permanent surpluses at the home loan interest rate. And let's take an example of how this works. Let's just take a loan of 1 crore, an interest rate of 10.20%, a tenure of 240 months or 20 years. The EMI works out to 97,830, and let's assume this was disbursed on April 1, 2013. Now let's further assume that this is an offset loan, and in the linked account what you do is that the loan got disbursed on 1st April. The linked account on 11th April you deposited 2 lakhs. On 21st April you deposited 5 lakhs. And on 30th April you withdrew back the 7 lakhs. Home loan disbursed on 1st April was 1 crore. 11th April you deposited 2 lakhs. 21st April you deposited 5 lakhs. 30th April you withdrew 7 lakhs from your linked account. Now what that means is that the average amount of loan outstanding was 97 lakhs, and just a quick way in which it has been calculated, it was 1 lakh for the first 10 months when there first 10 days of the month when there was nothing in the linked account. Then for the next 10 days 98 lakhs was outstanding, and for the next 10 days 93 lakhs was outstanding, and that averages to 97 lakhs. So essentially just 1 minute. I'm sorry for the technical issues. So as you can see, from the EMI of 97,830 in an offset loan, on the average loan amount outstanding of 97,000, at 10.20% for 1 month, the interest is 82,450, and therefore the principal repaid is 15,380. In a regular home loan, on the other hand, your interest portion would have been 85,000, which is on 1 crore at 10.20% for a month, and thus there is an additional saving of 2,550 rupees. This way you can find that your principal gets paid off much faster, and the money deposited, even where the money deposited in the linked account is withdrawn. In our example that we took, you deposited 2 lakhs, you deposited 5 lakhs, and then withdrew 7 lakhs at the end of the month. Even in that case, you saved a substantial sum of money. If you want to do the EMI breakup calculator, you can see the link on the link that is there on your screens right now. You can do similar savings every month on the transactions in the linked account. The breakup will be the same as a regular home loan if there are no transactions in the linked account. So if there are no transactions at all in the linked account, then clearly there will be no difference between a regular account and a linked account. So to quickly summarize, the advantage of an offset loan is that it uses temporary and permanent surpluses to reduce the interest liability. The beauty is that you retain the flexibility. You can withdraw the money, you can deposit whenever you have, you can withdraw. So you have complete flexibility, and yet whenever you are in a position to deploy, you save interest on it. It is for this reason that a small premium is justified. Even if you have to pay a little more, what we started off, that a slightly more expensive offset loan might be better than even a slightly cheaper regular home loan. And obviously this works well when that linked bank account becomes your main account, where all your cash inflows and outflows happen. Has everybody understood this? Are there any questions, any doubts? Please use the hand icon on your screens, so that I will be able to answer. You can also use the chat window to ask me any question that you might have. Fine, Aki. Okay, so we'll move on. These are the banks that give these offset loans. State Bank of India calls it Max Gain, Citibank calls it Home Credit, HSBC calls it Smart Home, Standard Chartered calls it Home Saver. These are the only four banks that currently offer offset home loans. None of the other lenders currently offer offset home loans. The other thing that you can do to save money while taking a home or taking a home loan is that, unless your loan amount is less than 30 lakhs, in which case the private sector and foreign lenders may not be very interested, you should consider them as well. With the changes in regulation, with the prepayment penalty now not being allowed on floating rate loans, there is no reason for you to have any issue. I think Kapil Mr. Kapil Bhatia has a question. Mr. Kapil Bhatia, I have just unmuted your mic. Would you like to give your question out aloud, please? Okay, Mr. Kapil Bhatia's speaker phone is not working. The question he asks is, he asks, can I take a loan from another banker who supports the project initially and then transfer the loan to my salary account holding bank? Yes, of course, Mr. Bhatia, you can do that. Especially if you have taken a floating rate loan, and eventually if your salary account holding bank also is willing to lend. So it may so happen that you wait till the project is under construction when you take it from the bank that is supporting that project, and once the project is complete, I think any bank would be willing to lend, including your salary account holding bank. And at that stage, if that salary account holding bank is willing to give you a better deal, you should shift. But can you shift? Of course you can shift. There cannot be any restrictions on shifting at all. Moving on, I think there are some excellent deals available on offset loans today. They are available at 10.25%. In fact, State Bank is available at 10.10% for loans above 30 lakhs, and for up to loans up to 2 crores. I think one of the things that we have seen, and I would like to know, and you can chat with me if your microphones are not working. Uh, a lot of customers prefer SBI, and correctly so, because it is one of the cheapest that is available. It is the cheapest, in fact, currently today, where you get offset loans at 10.10% for loans between 30 lakhs and 2 crores. So definitely SBI should be on your consideration set, but you could face operational issues in certain cases. And those cases could be when you are a self-employed businessman. The quantum of loan that you might get when you are a self-employed businessman, or you are salaried but employed with lesser known companies, or you have got large value loans above rupees 1 crore, or under construction properties which are not pre-approved by SBI. I think if you are in any of these four categories, then you might face operational challenges with SBI. But in any case, SBI definitely should be among your consideration set. But in order to get the best choice, also widen your base and then decide, use uh, marketplaces to get marketplaces like Apnapaisa to get competitive offers for yourself, and then decide depending on what best is available to you. So to quickly summarize, I think to save lakhs, please buy ready to move in property rather than under construction property. Even if you are forced to buy ready under construction property, go for a good 2080 scheme, where or go for a project that is pre-approved by at least one or more of the big five. Please remember, in both cases the risk continues to remain yours, though it gets reduced because of the involvement of the bank. And while taking a home loan, I think sometimes, or in most cases, even a slightly more expensive offset loan can be better than a cheaper regular home loan. I hope you found this uh, I hope you found this interesting. I'm open for questions now. I see there are questions coming in again from Mr. Kapil Bhatia. He asks, what if my loan is sanctioned but not being disbursed by the bank owing to any documentation that is incomplete between the builder and the bank? Should the loan have been sanctioned in such a case where the banker did not have a complete documentation from the builder? So Mr. Bhatia, I think your question was for the benefit of others. He says that he got a loan sanction from the bank for an under construction property, but the bank is not disbursing the loan because there is some documentation between the builder and the bank that is still to be done. And Mr. Bhatia's question is, should it have been sanctioned in the first place? Mr. Bhatia, was the property pre-approved by the bank? Uh, were you under the impression, or were you told that the property is pre-approved? You can chat me up. You can put the answer in the chat. Yes, so Mr. Kapil Bhatia says that yes, it was pre-approved. Well, Mr. Bhatia, if it was pre-approved, then it is the bank's hassle. And very, very clearly, if there is now been a issue between the bank and the builder, please, I mean, clearly the pre-approval itself indicated that the bank had done all the documentation. So I think you will be well within your right to ask the bank to cancel the loan, return all money to you, because it's clearly their fault that they had pre-approved it and now claim that some documentation is still pending. But one word of caution there, that if the bank has gone back on a pre-approval, you must worry about whether there is some issue with the project. So I would suggest that you dig a little more, and you dig a little more to find out what the issue is, because I think this might hide something that is wrong with the project, and you should be worried about your base principal money right now, because this is not something that usually happens. Mr. Kapil Bhatia says that they have not, the bank claims that they have not received a map from the builder. The property is shown as pre-approved, continues to be shown as pre-approved. Well, this is becoming curiouser and curiouser, Mr. Bhatia. Uh, Clearly, I think the bank is at fault. I would suggest that you file a if it is your lender a bank or a housing finance company? Is it a bank or a housing finance company? Okay, Mr. Bhatia says it's a housing finance company. I would suggest, Mr. Bhatia, that you should file a written complaint with the concerned. I am not taking the name. Mr. Bhatia has given the name, but it may not be fair to take the name in a public forum. Mr. Bhatia, I would suggest you file a written complaint with the HFC concerned on their website. You will see a grievance section on their website. File a written complaint with them that this was pre-approved and yet you are not disbursing. And if they still don't disburse it, or if they're still causing a problem, please go to www.nhb.org.in, that is the National Housing Bank, which governs all housing finance companies. Again, in National Housing Bank, there is a grievance section. You fill up that and I'm sure you should get relief. Clearly, I think you are being made a victim of issues between the housing finance company and the builder. Mr. Bhatia says that he has already complained to the housing finance company's website and an automated response came back and nothing else has happened in the last 5 days. I suggest you also file a complaint with, as I said, with National Housing Bank. And it might take a little time, but you are sure to get relief, Mr. Bhatia. Good. I think Mr. Bhatia is, thank you, Mr. Bhatia, for those questions. I hope you get relief. Are there any other questions that anybody else has? I see another question from Mr. Bhatia. He says that and I think his concern is that because of the delay in making this payment to the builder, he might be penalized. I'm sure where it is a pre-approved property uh, by the uh, HFC and they have delayed in making the disbursement, I'm very confident, although legally it is your liability, I'm very confident that if you take up the matter, make sure that all your grievances you have records for. Stop talking, don't talk on the phone. Talking on the phone has no value. So please make sure you file it on the website, take a printout, actually hand deliver it to the concerned housing finance company, file a grievance on National Housing Bank's website, take a printout and have it hand delivered. I think all that will make sure that when this issue of penalty for late payment comes up, you will not be penalized for that. Well, thank you. Thank you everyone. This was really enjoyable and I hope that when you purchase your property, this webinar would have helped you save some money, and if it has done, I think this would be a time well spent. Thank you.